So things are moving really fast. So that whole kind of tokenization of equity thing is a big deal. As you say, for foreigners, it makes it such a simple process. You pay me the stablecoin, got the equity in less than a second. Okay, that's wild.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Raoul Pal dives into how AI and blockchain will reshape everything from money to creativity and freedom. Let's watch and explore together.
Yeah, I mean, obviously, these digital assets have been around for quite a long time now, over a decade. And most of the time it was retail participation. And even with stable coins, that was a retail thing. Tether was really, Asian retail be able to send money around the world and South America. And then it became Asian corporates were using it to get around capital controls. So like Malaysia to China, stuff like that, to get around the FX cross rates. So we saw a bit of that. And then this year, as soon as obviously MiCA regulations in Europe came, and then the US just basically opened the door to it all, we've seen an absolute explosion in the space on the institutional side. So we look at the adoption of the space overall, it's been growing. When we kind of rebase it to 5 million active wallets versus, let's say, 5 million IP addresses back in the early 90s, for the internet was the fastest adoption of any technology the world has seen. Right now, crypto, since that date, has doubled the speed of the internet adoption. So it's been the fastest adoption of any technology, and it's now been superseded by AI. So what we've seen is massive adoption. We've now got 950 million active wallets. It's projected to get to about 4 billion by 2030. So that's going to be half the world. Now, most people have multiple wallets, so it's not fair, but so we're seeing that. So wallets are becoming more normal. And then we're seeing the institutions building all of the rails. And stablecoins is the killer app for institutions because it's just faster, cheaper, more efficient. So we're seeing everybody from Visa to MasterCard to PayPal to you name it, all using these rails. And we're going to see corporates doing it as well. So multinational corporates can move money around their corporate headquarters. Let's say you're a metals and mining company and you've got operations in Angola, Nigeria, Brazil, right? You need to move dollars around the world to pay staff, do stuff. It's actually hard because a lot of them have capital controls. But if you have an internal stable coin, okay, that makes it really fast and efficient. So I think there's a lot coming. The answer is we don't know. So for example, a single wallet will be BlackRock. And BlackRock have the third largest position in Bitcoin in the world. So you've got these super nodes in the network. So you don't really know. So the way I look at it as we're a $4 trillion asset class today. If I compare it to global equities, 200 trillion, global real estate, 300 trillion, global bonds, 250 trillion. So we're nowhere there yet. So if I just look at the trend rate of growth, I think we get to 100 trillion by about 2032. So that means we're only 4% of the way to 100 trillion. And that's still half the value of global equities. Now, what is the value of this thing if all equities, all bonds, and all real estate go on chain? I don't know. It's obviously not the value of the whole thing, but it's still going to be a large value. So all we're saying is we're 4% of the journey there, which makes it what I've said is the greatest macro trade of all time, because you've got this adoption curve of a technology. And unlike the internet, you can actually own a fraction of it via a token. It's amazing.
Bitcoin's price action is heating up again, and traders are watching closely as it hovers around $106,700. The battle between bulls and bears is intensifying, with two critical targets now in sight, $106,000 and $108,000. According to CoinGlass data, over $150 million in leveraged positions are stacked between these levels, creating what many traders call a liquidity trap. It's the kind of setup where even small moves can trigger massive liquidations and violent price swings. The current structure suggests that Bitcoin's next big move could be explosive. Trading just below the 200-day EMA, a key line that often separates bullish and bearish momentum, the market is teetering on the edge. After dropping from $120,000, Bitcoin has faced a wave of forced selling and collapsing open interest, leaving traders cautious but alert. The RSI has dipped to 36, signaling an oversold market, yet trading volume remains high. This combination points to intense fear but also growing opportunity. If Bitcoin can reclaim $108,000 and close above the 200 EMA, it could spark a recovery toward $112,000 or even $114,000. But failure to hold support might drag it down to $103,000, setting up the next dramatic chapter in Bitcoin's ongoing story.
I don't, but look, we know that, as we said, asset markets are going to get tokenized. There's a lot of people who want to tokenize real estate, but I'm not sure there's buyers of those tokens. All the real estate people want to sell tokens to find more liquidity. We're seeing the asset management industry, people like Apollo and stuff, talk about tokenizing theirs. I think what they're trying to do is find new buyers for private equity. So that I'm not sure how big that is compared to equities, which is a very efficient way, bonds, money market funds, that kind of stuff. I think that's really efficient. The gaming is a huge market. Billions of people play games, super active, and they exchange assets. And most of those assets, you can't move from one game to another, so you can't have value, because if you lose your login, your value's gone and all of this stuff. So it solves that. Even bigger than all of that is actually the move from Web 2 to Web 3. And that's stuff like digital identity. Well, that's an 8 billion person TAM.
Yes.
We're all going to need it when it comes to AI, right? Who's a human, who's not? Then you have this nice technology like zero knowledge proof. So that means that Drew can verify all his documentation, but he can remain anonymous online, and it can be proven that you've passed all your KYC. AML.
My wallet address is ticked. That's right. KYC wallet.
And then everybody can accept it. So that, we've seen stuff like that being done in India with Aadhaar, and that was a $1.3 billion digital ID. But we're going to see this at scale across the internet, and you'll have multiple digital IDs for different purposes. So we've got that. We've got putting of basically any verified information on chain. If you think of an NFT, a non-fungible token, what that really is a contract. So then when you think about it, okay, well, that's probably the insurance market because there's big value and it's settled on an outcome. We're seeing that with prediction markets, gambling, they're big markets. But we'll also see it with all ticketing. Basically, every ticket is more efficiently done as an NFT, and you've got other things you can build social graphs and stuff around it. So
and community tokens, whether it's Taylor Swift or Chelsea Football Club, right?
That's right. And so the scale of this thing is much bigger than people still understand. And so even at $100 trillion, what is the value of the internet today? That's kind of the question we're asking. What is the value of this? It'll be probably one of the most valuable things humanity's ever had, because it is, for the digital age, the global store of value, transaction layer, and kind of contract settlement layer. Now, everything that humans do is basically a contract. Even you and I today was it was an email, but it was like a written contract says, yeah, here, I'll turn up today. All the people watching this, it was a contract. Every time you buy something in a shop, every time you use a credit card, they're all contracts. And a lot of this can be done much more efficiently via these rails.
Ethereum is showing signs of a strong comeback, and traders are watching closely to see if they can reclaim the $4,500 level of this October. After dipping to a 2-month low of $3,435, ETH has bounced back over 15%, fueled by a mix of technical and on-chain signals pointing toward renewed bullish momentum. The recent rebound is shaping into a classic bull flag pattern, a formation that often marks the continuation of an uptrend after a brief pause. ETH's price has found solid footing around the 3,500 zone, aligning with the 200-day exponential moving average, a level that has historically acted as a magnet for dip buyers in bullish markets. If ETH maintains this momentum, a breakout toward the upper flag boundary near $4,450 to $4,500 looks increasingly likely. Analysts like Four and Luca believe that surpassing this zone could even pave the way for a push toward $5,200 in November. Supporting this view, ETH's MVRV data shows stability near $3,900, a level that has repeatedly triggered rallies in past cycles. As long as this base holds, ETH seems poised for another powerful move upward. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.